But here are three things you need to know right now. A tale of two ride-share companies, Uber and Lyft shares both falling sharply this morning. The rideshare companies have both reported earnings, and the tones at each company couldn't be more different. Guys, let's start here with Lyft. This was, on paper, the quarter looked good. Active riders up 32% year over year. That was okay, but it was the guidance that is essentially squashing shares of Lyft here. The company guiding to adjusted operating profits of $10 million to $20 million. The street was at about $83 million. Not a good look.
Interesting quarter, too, on the driver front when you saw this 40% increase of active drivers. Let's remember, this was during a quarter where many of the drivers were also incurring higher gas costs as well. And then also they were talking about Lyft Pink. This gives us a little bit more insight into how they're competing against some of the rewards that competitive platforms like Uber, which we also know moved up their earnings, how they're competing up against them and where they're expanding even with these partnerships in delivery. Beyond just ridership, I think in that delivery segment, it'll be interesting to see what more they have to offer in the future and how that expands too.
Yeah, and you would think we would have sort of a tale of the tape this morning with two very different reactions in Uber and Lyft, but that is not, in fact, what we are seeing. Uber shares had made an attempt at a comeback, and now they've come back down. Lyft shares, meantime, with their decline this morning, are set for the biggest drop ever with that 26% decline.
Uber tried to be cute, moving up their earnings release. They're like, you know what, we're going to have a pretty good quarter. We don't want to get lumped into this Lyft route here. Now, initially, the stock did go green for a little bit, but the sell-off has continued in large part because I think what Lyft said on the conference call, more marketing, more incentives, and Uber is not going to be immune to this.
No, not at all. And I mean, thinking through Uber and what we were seeing there, gross bookings, that particularly came in to play there, growing 35% year over year. They wanted to really cast a lot of light on where those different segments, and given that they're vastly different businesses, at least in how diversified Uber is versus a Lyft that is so concentrated on the mobility, whether that be micro mobility, whether that be the drivers that they have to engage with. I think at the end of the day for Uber as well, looking at these comparisons, how they're going to continue to try and differentiate themselves is in all of those other services and trying to create this sticky ecosystem.
I mean, two big picture thoughts here. One is that both the companies are going to have to spend more. That's the bottom line. Yeah. And we're not necessarily even talking about inflation of the fuel variety, right? We're talking about trying to attract and retain drivers. Yeah. And guess what? Uber has that issue, whether you're talking about getting people from place to place or stuff or food from place to place. The other thing, when I think about Lyft specifically, there was one word that jumped out to me from many of the analyst notes. And it's not the word that you might expect, Brian Sozzi. Overdone. Overdone is that word. Most of the analysts I saw, even though they said, yes, this was a bad quarter, the drop is overdone when you look at that 27% drop in the
Well, we have John Zimmer coming up on the show, so looking forward to putting some questions to him. And I'll just add this, too. You still get the sense, though, these are two different companies. Lyft struggling with a lot of things. Uber, their adjusted operating profits in that mobility segment up 107%. That was pretty good.